why is gold going up? Well, because we're edging little toe by little toe towards war. Yeah. And you can see that out there in the world. You can see that. Why is China loading up on gold? Why is the Chinese government loading up on gold? You could say, well, it doesn't want the dollar. Well, why doesn't it want the dollar then? Well, because it's going to be in conflict with America. It's no good having dollars then, is it? I mean, it will do, actually, because, they'll quite happily pay, a country quite happily pay with the currency of its foe in a war. But anyway, the reason it's doing it is because gold is for war. Believe that global tensions are going to do anything but rise. And if they're going to do anything but rise, gold will go up in real terms.
The global gold market is experiencing significant shifts driven by geopolitical tensions and changing economic dynamics. A recent analysis from financial market expert Clem Chambers highlights how major powers, particularly China, are strategically increasing their gold reserves. Chinese demand has notably transformed the global gold market landscape. The nation has emerged as the world's largest consumer, surpassing traditional rival India. Chinese jewelry demand increased by 10%, while Indian demand contracted by 6%. The 28% surge in Chinese bar and coin investments was even more striking, reflecting growing domestic interest in gold as a store of value. However, recent trade data reveals some fluctuation in Chinese gold imports. December saw net imports of 5.26 metric tons through Hong Kong, a significant decrease from November's 7-month peak of 33.074 tons. Total gold imports via Hong Kong in December declined by 44.6% to 25.007 tons, indicating short-term variability in the market. Chambers argues that governmental demand for gold is the primary driver of its actual price appreciation against fiat currencies. This trend is closely tied to mounting global tensions, mainly concerns over potential conflicts like those in Taiwan. The situation is further complicated by recent statements from former President Trump regarding possible tariffs on Canada, Mexico, and China, which have intensified fears about global trade disruptions. While a theoretical easing of global tensions could lead to lower gold prices, the current trajectory of international relations suggests strong demand for the precious metal. Market analysts expect gold to maintain its appeal as a safe haven asset, supported by multiple factors, including persistent geopolitical risks and international tensions, uncertainty surrounding U.S. monetary policy decisions, global trade uncertainties, and political transitions and policy shifts in various nations. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I come back to this over and over again because for me, it's a very simple, very perfect model. Okay. What is the use case for gold? Now, a lot of people traditionally will say it's real money. It's going to make a comeback and everyone's going to be walking around with, silver dollars and, gold $20 and coins again. And it's all going to be remonetized and yada, yada, yada. And I say, no, that's never going to happen. But does gold have a use case? Well, yes, it does. It has it in jewelry and everybody loves a bit of jewelry and India buys it for that and etc. And, not dentistry anymore. Yet for silicon chips and all that sort of stuff, it has a use case. But the question you have to ask yourself is, why do governments keep it in warehouses, large quantities of it at great cost? Why do they do that? Now, some people say, well, that's because they're going to remonetize it. They know it's God's money and they know it's coming back and it's there because they're going to remonetize it. It's just a matter of time. And I say, no, it's there because gold is bullets. Gold is for war. So if you want to stop a war, say you're an English socialist, you sell your gold off. A country can't fight a war without gold. It doesn't have any gold. It can't fight a war because what's it going to pay with? Yeah, it's going to it better win quick if it's going to pay with its own money, or its reserves. Gold is a financial reserve in war. Okay, so why is gold going up? Well, because we're edging little toe by little toe towards war. Yeah, and you can see that out there in the world. You can see that. Why is China loading up on gold? Why is the Chinese government loading up on gold? You could say, well, it doesn't want the dollar. Well, why doesn't it want the dollar then? Well, because it's going to be in conflict with America. It's no good having dollars then, is it? I mean, it will do, actually, because, a country quite happily pay with the currency of its foe in a war. But anyway, the reason it's doing it is because gold is for war. And, as tension rises, as I keep saying, you're not going to go, well, we're going to be at war tomorrow. Oh, okay. So how much reserves have we got? Well, we haven't got any. Did we rearm? No. We're going to have a war. You go, oh, dear. Instead, you go, oh, dear. It's getting a bit sticky, isn't it? Oh, do you think we should maybe put a bit more money in our military budget? I think that's a smart idea. Oh, do you think we should be spending a bit more money on research and development on things like drones and stuff like that? Oh, yeah, I think that's a good idea. And do you think we should be laying in some more gold? Oh, yeah, I think that's a really good idea. Yeah, because as tension rises, so you prepare. It was the rearmament in Germany that preceded the Second World War that told everybody it was coming. It was the arms race before the First World War that told everybody that the First World War was coming, or at least historians will tell you that's what caused it. And there is right now rearmament in Europe. They're certainly thinking about it anyway. So they have to buy gold. Europe has to buy gold. Well, China's buying it already. And I think you'll be seeing America buying it. Every country is going to be, I think we'll have a little bit more of that gold in the warehouse. And that's just going to push gold up in real terms against all fiat currencies because there's more demand for it. And the ultimate use case for gold is going to be front and center. Now, if suddenly Trump, and Xi are the best friends, then, Iran starts to be sensible and everybody sings Kumbaya and goes to the United Nations and has a bean feast, then gold will come down like a lump. It's just not going to happen. Does any of your viewers believe that global tensions are going to do anything but rise? And if they're going to do anything but rise, gold will go up in real terms. Now, if people go, well, no, this is not, it's not going to get any more sticky than this, but gold's going to be monetized, I think that's not a great thesis. But if you were thinking in terms of, well, China wants Taiwan and they're going to be, angling for that. I mean, that's where all the chips get made. That's where the AI machines get made.
In a historic move, the Bank of Japan has increased interest rates to around 0.5%, the highest level seen in 17 years. This decision marks a pivotal change in Japan's monetary stance, with the central bank indicating potential further tightening measures. This development has created ripple effects across global markets, particularly impacting gold's performance against the yen. Meanwhile, the Federal Reserve's monetary policy has taken a different trajectory. The central bank implemented a complete percentage point reduction in its key lending rate during the final quarter of 2024. However, recent data showing inflation moving away from the Fed's 2% target has prompted a more cautious approach to future rate adjustments. This situation has created a delicate balance for the Fed as it navigates between maintaining economic stability and managing external pressures, including those from political quarters seeking more aggressive rate cuts. Clem Chambers provides insight into this complex scenario, suggesting that while interest rate reductions are likely on the horizon, the Federal Reserve may proceed more gradually than market expectations. He notes that the combination of slower rate cuts and inflation above historical averages creates a favorable environment for gold appreciation. Let's get back to the interview.
If you own gold and you think the Fed is incompetent, you're in great shape, okay? Because, if they mess up, gold goes through the roof. And I don't think it's the Fed making gold go through the roof. It's the fact that China and the US are going to be at loggerheads and gold is for war. And, international global tension is going to make gold through the roof. You don't need to have the Fed mess it up. Yeah, it's already on the cards that the world's going to get more and more stressed and governments are going to be buying gold. They're going to be the big customer. They're going to be laying it in because gold is bullets. And as you head towards a conflagration, you just can't, you have to rearm, don't you? And there will be rearmament. There is rearmament. Europe is going to rearm. But you can't just build tanks. You've got to rearm with gold. Gold is international currency in war, okay? And that's what will drive that. And it's going to drive it for years. So you're in great shape. You don't have to hate on the Fed to have gold do well for you. But if the Fed is useless, it's going to double the effect. So the Fed has got us through 2008, got us through COVID. Yes, there were costs. Of course, there were costs. Everybody sat on their backside for the best part of the year and did nothing. So funnily enough, the only way you could keep that ship on course was to, create inflation like they always do at the end of a war. I mean, the reason that you get inflation is a way of papering over the disruption that you get from emergencies like wars and plagues. And that's why you got inflation. Inflation is not accidental. Never has been, never will be. Okay. Always created for a purpose. Now, they've reined it back in again because long-term inflation is very, very bad for an economy. They've reined it all back in, but they can't rein it in too quickly. And if Trump has decided that Jay Powell is going to stay in place, which I think possibly it has, then they will lower interest rates, but slower than the market expects. But they will be lowering it anyway because, a little bit of creeping inflation, a little bit more creeping inflation than we used to have will probably be, suitable. And so the interest rates are going to come down slower than people hope. Inflation is going to be a little bit higher than it's meant to be, and that's all all planned out. So you will get falling interest rates, but not falling that fast, and you'll get inflation down, but it will still feel as if it's a little bit higher than it should be. And that's going to be what we're going to be getting the next year or two. And then, of course, there's the huge wild card of what happens with things like all these trade tariffs that may or may not happen, and all the spanners that are going to be thrown around the world in the next 1, 2, 3, 4 years. And, that's going to make things pretty volatile. And how that pans out will yet to be seen. I mean, there's been some exceptionally unexpected moves in the first few days of Trump's new presidency. And if that's anything to go by, that will certainly carry on producing lots of sparks and lots of surprises.
Exciting times lie ahead in the precious metals market as gold nears historic highs, trading at around $2,800 an ounce. This surge is particularly thrilling as gold has reached record levels against the Japanese yen, influenced by intriguing changes in Japan's monetary policy. We'd love to hear your thoughts in the comments. If you find this video inspiring, consider subscribing to our channel and hitting the notification bell so you never miss an update. Thank you for being such a vital part of our community. We're glad to have you with us.